Welcome, guys, in another episode of the Ravan Show. And this is episode two, and we'll basically be discussing about finance and stock market, stock exchange, and all those sort of things. So we have a quite an educated panel today, and we have Shikhar Raj, Pushyan Tyagi, Akshay Gilhotra, and your hosts Abhishek Purohit and Rahul Yadav. So we can start the debate today.
Okay, so I have one question. So normally in our families, in our older generation, we would always be asked to invest in PPF, RDs, or FDs, correct? And we would not be able to told on the very beginning that there is stock market, correct? So that's never been actually taught from the. But so how is it different from FDs, RDs, and being into stock market, getting into the stock market?
So it's simple. The advice at that time was very, very right. So why I'm saying that is because understand with higher return, you are basically running higher risk, right? So
Mhm.
stock markets tend to give you higher returns, but then you are running a higher risk by investing it into equities directly.
Mm-hmm.
Back in the older times, when the government norms, the SEBI norms were not as tight as it should have been, it was very easy to float a company, get investors around, and then bust the company, take the money away, and a lot of people burn their hands in stocks. But now with the kind of policies that we have from the government, the strict and the tight regulations that we have from the SEBI and the other government authorities, it's difficult. So if you look at the companies who have gone bust, some of the most recent examples like DHFL. Who is the owner? The owner is behind the bars. He's being investigated by the Enforcement Directorate as to the money laundering cases that have been going on. Another good example that everybody would have seen is Mr. Doot, who was running Videocon. And the company got burst, and Chanda Kochar and what the loan they have raised from ICICI Bank. So that's again, so it's not that easy. Although these mishaps do happen, but it's not that easy to get away with it. So I completely agree with the advice that was given to us by our family back then, but then times have changed. So as they say, roll with the punches now. So,
Okay.
Okay. Pushan, you want to say something?
Yeah, I'm saying that, like Shikhar said, absolutely right. Because previous times, share market में इतना इतना returns नहीं मिलते थे. But nowadays, if you see, volatility बहुत होता है, high risk and high return. So you have to select the right stock and on the right time. That is more important thing. So that is the knowledge we have to gain. कि हमें कब स्टॉक सेलेक्ट करना है और कौन सी कंपनी में इन्वेस्ट करना है. दैट इज द मेन थिंग.
Wait.
Okay. Akshay?
Yes, so I would say, I mean, the question was why we had less of education for stock market that time, but I would say there were a handful of people even at that time who were well versed in stock market. People who were smart, people who knew about the system, they took a lot of advantage even at that time. So
Mm-hmm.
there was a generation who grew and had wealth, created a wealth just because they knew something even at that time. Although, of course, as Shikhar said, it was a very risky profile that time, and the liquidity was low. It was better to invest in PPF because we were kind of a lower than middle class. Most of us were belonging to a lower than middle class whose risk profile was very, uh, little, so we could not take too much risk. So that time PPF was the best thing, and if you remember, the interest rate of PPF I think was around 11% and above, which is a handsome return. But people got 1,000 times returns in stock market even at that time.
Hmm.
So what you're actually saying is that FDs and RDs is a safe investment and stock market is not a very safe investment?
In current scenario, I have a little contradictory statement. Even FDs and RDs are equally risky, just like stock market, because we never know when a particular bank goes bankrupt. You know the example of Yes Bank. So you've seen, must have seen in TV also. You've seen example of cooperative banks. People had their life savings there. So it is said to be less risky, but it can happen anytime with FDs and RDs as well.
Shikhar, so your thoughts about the safe investment and the
See, in my opinion, your fixed returns are not safe investments. I'll tell you why. Whenever you invest into something, you're expecting returns, but then don't think of returns with 3.5% is the savings return that we are getting when we put our money in a savings account with SBI, ICICI, Axis, HDFC. These are the bigger banks that we have in the country. What is our inflation rate that's going on? It's close to 6.5% as of the last data that we have seen, and we are thinking that the low days of inflation are over, and now the inflation is going to creep up and up and up. And what is the FD that we are getting? The return on the FD we are getting close to 7%, 6.5% in some cases, 7% if you're really, really lucky. So is it a safe return? I don't think so, because if you're not able to beat inflation by investing into FDs, you're basically getting poorer and poorer with your money. So understand this uh, from this point of angle. So if your 100 rupees today buys X amount of goods, after 10 years, because the inflation is going to be higher, your 100 rupees will not be able to buy the same amount of goods. It's going to be definitely by a value of inflation, it's going to fetch you less goods. If you get X amount of return from investing into fixed deposits and you're not able to beat the inflation, which means that you will not be able to buy in today's terms whatever amount of goods you were able to buy. After 10 years, you won't be able to get the same amount of goods, which means that you're poorer now. So how is it a safe investment? That is how I see it. And investing into stocks basically provides you an arbitrage in terms of beating inflation, because by default, what is your expectation when you invest into stock markets? Your expectation to in a stock market return is a simple calculation, which is your GDP plus inflation. So your GDP is doing around 6%, your inflation is doing around 6%. So you should expect to make 12% easily in stock market. And that is how I see it.
Can you
So you're saying if you compare both, like stock market and putting your money into FD or RD or savings account, so are they equally not risk free, or they're you're judging it equally?
No, like I said, stock markets are risky, right? And bank deposits are not risky, because first of all, you've got an insurance cover on that deposit,
Yeah.
where up to 5 lakh rupees, if at all the bank goes down, the government will get that money back to you over a period of time. So I see it as risk free for small investors, right? But then if you're a bigger investor, you have put in a crore rupees in there, then you don't have a risk cover on that bank. If at all the bank goes down, then your money goes down with it, right?
Yeah.
So that is point number one. What I'm saying is that if you're cautious, if you do your own research, then you would always prefer to put the money in the stock market, because your expected return from a stock market is your GDP plus your inflation, right? Which is close to 12, 13%. If the times are good, India could do 15% easily. GDP plus inflation plus could be around 15%.
But
But
But Shikhar, that's subjective, right? For example, अगर किसी ने 2015 में invest किया या 2016 में expecting 10-12% return, आज उसका return I think close to break even शायद हुआ होगा. जितना invest किया उतना भी मिल जाए बहुत है. So it is so risky that we can't even say that you can beat inflation. It is subjective to the timing. आपने जिस टाइम पे इन्वेस्ट किया और कब आपका विड्रॉल है. तो अगर हम कहें कि 1 साल की एफडी और 1 साल का स्टॉक मार्केट का रिटर्न, वी कैनॉट डायरेक्टली कंपेयर, बिकॉज टाइमिंग विड्रॉल का क्या है उस पर डिपेंड करेगा, राइट?
That is very true, Akshay. And that is why I always say, and when I talk to Abhishek, see, we are not in the we are in here for the long haul. We're not here for 2 years, 3 years, paisa banaya, nikal gaye. No. We are here for 10 years, 20 years. And we're not looking to make 20%, 30% profit. We're looking at multipliers. We're talking about 5 times returns, 7 times returns, 10 times returns. That is the return that we're looking for. So whenever you compare, first of all, if you have the money, always ask yourself, what is your horizon? Do I need this money in the next 2 years, 3 years? And if your answer is that no, I am ready to be in it for more than 3 years, go in stock market, because for every 3 year period or maybe 10-year period that you compare with an FD to what you have, fetched the return from a stock market, it is always multi-bagger returns that you have gotten from it. So that is my thinking.
I am agree with. I can tell you the with example also. If you see, Indian stock market has started in 1979 with 100 point. That means that उस टाइम पे जो अपना सेंसेक्स का था फिगर 100 और अभी if you see current data 37,000 सेंसेक्स का जो हमारा वैल्यू है अभी तो 1979 100 2020 we have 37,000. So 100 से 37,000 370 times return. But वो था 1979. So if you see higher मतलब if you a long time के लिए if you are investing, then it will be very good. In the short term, it is very risky and timing is more important.
So Akshay, do you have something to say on that?
Nope. So
Okay.
I agree with Shikhar and
Okay.
Pushyan.
Yeah. So let's suppose if me and Rahul want to start investing now. Okay, I've done it already with the advice of Shikhar. Anyways, so if you want to start now, correct? What should be our portfolio, and what exactly is a portfolio, correct? And what should be the diversification in the portfolio?
See, even before you start, you first should know that you're ready to start, right? Because stock market is a really tricky place, and there's something called boring in stock market, and there's something called really exciting in stock market. So all those companies, who were really, really exciting, like Suzlon, Yes Bank, they used to go up and down. People used to short sell the stock, invest in the stock. Suzlon was a stock that was like 30, 40 rupees. It went up to like 400 rupees today. I don't know. I don't know what's the price value of Suzlon today. Maybe 5 rupees, 7 rupees. It keeps fluctuating. It's a penny stock today. There was a company called Punch Lloyd. These are all exciting
Yes.
stocks, that basically gave you a pulse. Wow, I could have made so much money. These are your distractions. You should basically, first of all, train yourself that you will see a lot of distractions. You will hear a lot of stories where people will say, see, I made 2 times, 3 times return by investing into this story. But then just think of it as a gamble. They took a gamble that worked for them, but it is not the recipe for a long-term money-making approach. Understand that. You can get lucky one time, but you are in here for the long haul, right? You can't basically get on a strategy which is based on bluffing. And if it works, then you make X time returns and then you are out of it. No. So you need to look out for boring stories, is how I would like to say it. Stories like HDFC Bank, who don't move like more than 2%, 3% in a day maximum. If it goes 1.5%, it's news. HDFC Bank went 1.5%, 2% a day. ITC, these are the boring stories. And they basically create wealth for you year after year after year after year. HDFC Bank in the last several quarters has never disappointed with its result. What that means is that its profit continues to grow quarter on quarter, and today it's become, quite a big franchise, almost 7 lakh market cap it has today. So the point I'm trying to make is that these are your wealth generators. These stories perform consistently. Asian Paints, they never disappoint. And what you want to do is look at these stocks as if you're putting your money in a fixed deposit, because It will keep generating 12, 13, 14% per annum return, and it's going to be much better than an FD. So that is how I go about investing. So that is a very valid uh, training that a person should undergo before he actually decides to take a dig into the stock market.
So what's your like? Um, I haven't done anything in stock market yet, and I could not find any interest as well. So what would you suggest a guy like me who wants to explore into stock market? So what should be the prerequisite like as a beginner?
So again, it's very simple. Are you passionate about it? First of all, do you have the
Hmm.
time, energy to actually look into individual stocks, do your own research? If you don't have the time, then I would suggest that better go in a mutual fund. Let the fund managers manage the money for you.
Yep.
Go in an ETF approach, because in mutual funds, you're basically paying 2% of the profits that they're earning for you in terms of the management fees, right? So if that is too much, you can become intelligent and you can basically invest into a Sensex based ETF, right? Which is also giving you quite a decent return. But to manage the ETF, the investment manager for that ETF does not have to spend a lot of time managing the money for you. And hence, the management fee of an ETF is negligible, right? So you can go with an ETF approach. So that's a question that you have to find the answers to, whether you want to invest into the stock market directly or you want to have a proxy approach to it.
Yeah. So here, because there are certain terms that our viewers also might not understand, what is the difference between a stock, a mutual fund, and a ETF?
So ultimately, the money is always going to go in equities, which is stocks, is also
Okay.
known as equities, right?
Mm-hmm.
But you can have a proxy approach to this, wherein what you do is I've got X amount of money and I don't know which stock I want to buy, like Rahul said. So I don't have the time and energy to research which is going to be the next HDFC bank. I simply can't, right? And even if I could, what is the guarantee that my research is correct and it will yield me returns? So what you do is let the experts do the job. You go to a mutual fund who is going to be managing the money in the form of funds to you, and eventually it's going to be equity based mutual fund or debt based, or you have different categories of
Mm-hmm.
mutual funds as well. And then there are aggressive mutual funds or mid cap funds, large cap funds, and all that categorization is there. Depending on what your risk profile is, you can choose the mutual fund, which could be a small cap fund because you're an aggressive investor and you want to make good amounts of money. Maybe small caps haven't performed in the last few years, and you think that now the mid caps and the large caps have run up, and it's now time for the small caps to shine, right?
Mm-hmm.
So that is a mutual fund. ETF is based on something like Sensex, So the ETF could be that, okay, whatever the Sensex captures, the 30 stocks capture, the fund manager is going to allocate your funds in getting those 30 stocks for you. So it is automatically managed. So the fund manager does not manage it. So when you allocate the money in an ETF, your money is indirectly invested into the Sensex 30 or the Nifty 50 based stocks or the Nifty 500 stocks,
Mm-hmm.
automatically as the index keeps growing. As I could hear somebody just say that in 1980s, the index was sub 1000 and today it is like 30,000, 37,000, and it's going higher and higher. Your money would have increased by that proportion, right? And companies who have fallen out of the index, there have been companies who keep coming into the index and companies keep falling out of it. So automatically your portfolio churns to stay up to date and you're current, so that you are always invested in the best of the stocks.
Okay. Now, here is a question that I want to also ask. Um, Basically, what I heard was when Yes Bank was going down, correct? That there were many of the mutual funds investors who have actually aggressively invested in Yes Bank, even knowing their shape, correct? So, how do we actually trust a mutual fund in that case? And then most of the mutual funds actually came down, correct?
That is true. But then remember that the fund managers, because they're professionals, they wouldn't have, and especially thanks to the SEBI, who have certain rules, in how the money can be invested in a mutual fund, there's something called overexposure, which is kind of a problem sometimes. And I'll give you both the examples, why it is a problem in some cases and why it is good in this case. So because Yes Bank had a huge history of generating wealth. Okay, so it was generating wealth. It was seen to be the next HDFC Bank in the making. But then nobody knew that they were cooking the books. They were not reporting the losses, the bad loans, and everything the way they should have. So that is the problem. Now, because how the SEBI wants you to, or the mandates, the investment should be done. You can't have overexposure in just one company. You have to be well diversified. So even if your one bet goes wrong, because you're not overexposed in that company, you're not losing out on all your money. It's just that specific portion which has come down. And also, when Yes Bank started to go down, people realized that, yeah, there is a problem in it, right? And fund managers don't hesitate to book losses. There's something called cutting your losses, which is a fantastic term that I've learned in the stock market. If something isn't working for you, it hasn't worked for you in the last several quarters, don't expect that it will automatically turn around magically. It won't. So even if you're getting your losses, book your losses. And I actually booked quite a huge loss in Yes Bank, and I booked out of it. And today I'm glad that I'm not in a penny stock, because when I booked the losses, it was still at 100 rupees.
Okay. So booking up a loss means basically if you know that you have bought a stock at 180 rupees,
Yes.
and you say that it is coming over 100, so you can book the loss of 80 rupees per
rupees.
stock. Okay. So you should
Akshay,
always, yeah.
you have any questions?
Yeah, so I mean, I just wanted to answer it more holistically. Let's say you are talking about your profile, right? How do you want to start investing? So as an individual, first of all, you need to ask yourself, what is your risk profile? So asking for analyzing the risk profile, you need to understand how much money you need for your retirement, how much money you need after 10 years, how much money you need for 5 years, and what is your spending style. Are you spendthrift, or you want to save? So what kind of person you are? And asking all of these questions, you write on a paper and you just judge that what would be the better scenario for me. And then you diversify, as Shikhar mentioned. You can diversify in mutual funds, ETFs. You can diversify in a little bit of gold. You can do direct stock market, some good shares, as you mentioned, HDFC, and good shares like ITC. But as a beginner at this age, you maybe you're in mid 30s. As a beginner in this age, what I would suggest, first you understand that you have enough money for a retirement. That is very important, because usually this is the mistake what everybody does. We don't leave money for the retirement. So how much money is required for the retirement, that has to be sorted out. The next step is, do you have money for your emergency needs? Emergency needs could be, let's say, 5 lakh rupees, or maybe 2.5 lakh rupees. Then you come to the risk profile. How much can you play it is a gamble. Let's consider stock market is a gamble. And then how much can you spare every month for that gamble, considering even if it is lost, you will not be crying. So you should put that much money in the stock market. And then even in the stock market, you have small cap, mid cap, large cap, derivative, futures and options. A lot of things are there. But if you're a starter, go for mutual funds. I know you cannot trust them, because there will be stocks which they buy which are risky. But you start with mutual funds and look at the portfolios of those mutual funds, what they're buying. So you keep on tracking the returns every quarter. You keep on tracking the returns, and you also keep on tracking their portfolio, which shares they are buying. Then you start learning yourself, okay, these are good stocks, these are bad stocks. And then you, after a few years of experience, you jump into the direct stock market, buy some good shares yourself. And that's how you start making a good wealth over a longer period of time. The good thing is, in diversification, you have diversified for every category. So you will not be at a loss for anything. So you have everything in your portfolio, and that's how you will never end up making a big mistake.
Okay, thanks Akshay for the great advice. Okay, apart from that, it could be a different kind of question, but I'm just curious about it. That how do you see the role of SEBI when we've seen recently what happened with the banks? A couple of banks have gone bankrupted and gone down. So how do you see the role of SEBI or other financial bodies and authorities? Don't they see that coming? Like at present, we are sitting here, and can't they see that coming if suppose ICICI Bank could get bankrupted after 2 months, say? So can't they see that coming right now?
So who wanna go first?
Shikhar, I can.
Okay. So, first of all, SEBI's job is to ensure that the listed companies follow certain guidelines. It does not manage banks. It is
Okay.
for the RBI to basically take a look at, what is the economy doing, what is the banks that it is governing doing, all of that, right? But then there are auditors, who really will audit if the banks are reporting the correct numbers and all of that, right? So again, RBI is not looking at individual balance sheet and if they're reporting the correct uh, NPAs and the exposure, if that is all correct. That is basically it's going to the statements that is being published, and the auditors, if at all they're manipulating, cooking the books, then even the RBI wouldn't know. But then RBI, whenever it senses a problem with the banks, it tries and control. So, for instance, RBI did a very wise thing this year, where it mandated that listen, this is a COVID era, and even if you have made profits this year, we don't want you to distribute dividends. So, big banks like HDFC, which I'm a huge fan of, they didn't distribute any dividends because RBI sensed that maybe even if you are reporting good numbers today, the books could deteriorate in the coming months. And that's where you could use this dividend income to repair your balance sheet to a certain extent, right? So they do whatever they can in their capacity. But then if the banks decide that we are going to blind the RBI, then, there's nothing they can do about it. For instance, in Yes Bank, the way they managed the Yes Bank crisis, I'm not 100% convinced as what they did in terms of the ownership of SBI and IDFC and all those small banks. They groped the stocks just to make a small time profit, one time profit. But I've got my reservations to that decision, what they did. But in terms of how smoothly the management change was handled by the RBI. They had their own person sitting in the board of Yes Bank, and there was a smooth transition of management that happened. So they do whatever they can in the interest of everybody.
So you're saying it's kind of a part of the corruption.
It is not corruption. It is like if I'm a governing body and if I don't have access to the complete data, then how will I take the best decision? It's something like that.
Okay,
So I can take
but
example of 2008 crisis सत्यम उसमें क्या हुआ था बेसिकली कि सत्यम रिपोर्टेड गुड बैलेंस शीट मतलब उन्होंने फेक नंबर्स दे हैव शोन तो उसमें सेबी भी कुछ नहीं कर सकता बिकॉज कंपनी ही अगर फ्रॉड पे आ जाएगी और वो गलत नंबर्स अपने बैलेंस शीट में दिखाएगी तो अल्टीमेटली जब वो फ्रॉड सामने आया तो उसका स्टॉक बिल्कुल क्रैश हो गया एंड मैनी इन्वेस्टर्स हैड बुक देयर लॉसेस So, but I think I'm agree with the Shikhar. कि SEBI is doing his job, and but अगर कंपनी ही फ्रॉड करेगी तो उस केस में तो like nobody can say.
आई थिंक इसमें मेरा थोड़ा सा ओपिनियन डिफरेंट है. आई थिंक सेबी जो है, सेबी इज अ regulator, but in practicality it always comes with a solution after the massacre has happened. Like when
Yeah.
everything has been done
Yeah,
with, then they
that's my
come.
real question. That why can't they see it coming?
See,
beforehand.
market is always smarter than regulator because there are always loopholes. For example, futures and options. You must know derivatives. ICICI Bank was lending to a person in Singapore who was trading in oil futures, and he made a loss of 100 million. So ICICI Bank declared that yeah, we lost 100 million because we gave a loan to that bank, to the guy for playing in future and option. It was a margin given to him. So
Hmm.
these kind of things, I mean, SEBI knows, but उसमें क्या होता है कि SEBI has some guidelines कि तुम इतना ही लोन दे सकते हो, उसकी रिस्क प्रोफाइल देके इतना लोन दे सकते हो. तो अकॉर्डिंग टू द रूल्स बैंक फॉलोड द रूल, एंड लेकिन उसके बाद लॉस हो गया तो कुछ भी हो सकता है ऐसे सिनेरियोज में. एक और एग्जांपल हर्षद मेहता स्कैम, और ये सत्यम स्कैम. All these scams happen because market is smarter than SEBI, but SEBI comes out with a rule, and अभी भी ऐसा ही होता रहेगा. कोई ना कोई नया स्कैंडल या कोई ना कोई नया प्रॉब्लम आएगी सेंसेक्स में जिसकी वजह से हमको ड्रॉप देखने को मिलेगा. ये यूएस में भी ऐसा ही होता है. यहाँ पे रेगुलेटर कैन नॉट प्रोटेक्ट द रिटेल इन्वेस्टर्स. दैट इज फॉर ट्रूथ.
Okay. Any question, Abhishek?
नहीं, so I want to check, और किसी को कुछ बोलना है? I will come to next question. Okay. So what should be, so as Shikhar and Akshay have actually talked about, correct? The diversification of the portfolio, correct? So how should I calculate what, in my current situation, what should be the different kind of diversification that I should do on my current portfolio? Like, how do I have to buy Reliance? Do I have to buy Asian Paints? Or what is exactly a diversification of these stocks?
Do you have a bar at home?
No.
No. So let's say you want to make up a bar at your home. So what would you have? You will have couple of whiskey, you will have few beers, you will have one vodka, one rum. That's the way you diversify. So you keep a little bit of everything, and just look at your age. The more your age, the lesser the risk profile. I think that's how you diversify. There is no hard rule. Financial consultants will tell you that these are the rules for you, but I think you should look for yourself. What do I need? And then you set up that bar at your home.
Don't
Okay.
drink too much.
Shikhar?
So, first of all, understand that investing in one single stock like Reliance, you're already diversified. How? Because Reliance is into different business segments. They are into telecom, and they're venturing into uh, technology, interestingly. And it's very interesting to see how that play is gonna play out, right? And we have talked about this, Abhishek. They're getting into 5G hardware and technology in that area. They're getting into smartphone business. They've got a tie-up with Google now in certain aspects. So technology play is the most exciting play. But still, when I look at what they're doing in retail, I mean, it's not less exciting at all because they are kind of tying up with WhatsApp, and they're trying to connect with the Kinara stores, which means that the Kinara store is going to own the real estate, and they're going to manage the supply chain for these Kinara stores, and the orders will be managed by the Kinara stores. So this has got immense potential because in India, you have got 130 crore population size. In America, you just have 25 crore population size. How many big retailers in America? So many. And have you looked at the market cap of each one of those? For instance, Walmart is like a $300 billion company. Can you believe it? It's a $300 billion company. What is Reliance today? Reliance is just a 160 billion. Maybe, I don't know, with the current upsurge, it's close to 180 billion. Not that. So it's still quite small when you compare it to a Walmart. Do you see the potential it has? So the retail business in Reliance, which they are valuing close to 3 lakh crore, I don't know. It's quite small. It's a petty number. So the just by looking at the retail business in Reliance, it can grow many folds. And then the oil to
But
chemical business is there. I just wanted to complete one point, Akshay. So the third major vertical that they have is the oil to chemical, which includes a lot of chemical products and petroleum products. And then they have KGD6. So they are an upstream, downstream company. They are hugely diversified. So you can actually own this one stock and you're still diversified, right? But the point I'm trying to make is that diversification depends on how you want to play the market, what is your risk ability, risk profile, and depending on that, you don't want to put all your eggs in one basket. The famous quote from Warren Buffett. So maybe tomorrow, once Mukesh Ambani steps down, what is the guarantee that the three siblings won't fight it out amongst themselves for the empire, right? So there's always risk to that. So you should always be diversified, not in terms of sector. I'm trying to show you the different segments of diversification, right? So you're by owning Reliance, you're basically diversifying into multiple business verticals, industry areas. But then at the same time, you should be equity diversified as well. You can't just own Reliance and say that, okay, I'm diversified. No, because tomorrow, what if Reliance fails for one or the other reason? You put all your money in there, and if it is your retirement money, then you're doomed, right?
Mhm.
I'll let Akshay come in. You wanted to say something.
yeah, actually, no. Let me ask Pushyan. He's working in Reliance. So, what's your thought? If
Yes.
I give you, let's say, 10,000 shares of Reliance, and you have made a handsome profit now, would you sell it or you would keep it, considering the bright picture ahead?
Yeah, so I can suggest कि right now जो भी situation है जो scenario है and तो उसके हिसाब से you don't have to sell right now because there are many reasons because already Shikhar said that about retail. So one of the reasons is retail because in retail they are actually working. They have launched GeoMart, that's one app they have launched for for
Your
expanding
daughter
their
is
retail.
singing a poem. Let her sing. and and for in telecom they are expanding hugely and they are coming with the 5G also. So बहुत potential है अभी and they are diversifying. They are doing from oil to chemical to technology company and retail company. वो अभी वो चल रहा है and there is a huge scope. So So, do you think they're right now their core focus is on technology?
yes, yes, yeah. Right now they are focusing on technology and because petrochemical and all this business they are उनके पास है ऑलरेडी एंड दे आर उसके वो ऑलरेडी सबसे ज्यादा पेट्रोल रिफाइनरी है एंड ऑल दीज थिंग्स बट पेट्रोल एंड ऑल दीज थिंग्स दे नो कि अभी आगे फ्यूचर में that less scope electrical vehicles and all these things. So में they are diversified और अभी फ्यूचर में भी बहुत स्कोप है. So for retail investor I can say कि रिलायंस अगर है आपके पास तो you should not sell right now.
मेरा इस पे थोड़ा सा कॉन्ट्रडिक्टरी ओपिनियन है अकॉर्डिंग टू द वैल्यूएशन सो इट्स अ फेवरेट स्टॉक for retail everybody willing to buy so if you just see the results I mean they got debt free they had a huge valuation number because they got invested by so many FIIs but if you see their profits right because they are because they're changing the total game they're moving to technology retail and they will probably be making electric batteries at a point with BPCL BP merger they have so what I'm saying इस टाइम पे जो वैल्यूएशन है वो मेरे हिसाब से बहुत ज़्यादा है because people have piled up Reliance stocks like anything and in July most of the mutual funds sold RIL shares like anything so the reason is probably they see not too much growth in that stock. So I'm saying what Shikhar said is perfectly right. It is a very good stock, but उसकी वैल्यूएशन बहुत ज़्यादा है इस टाइम पे. तो डाइवर जो उनका पूरा गेम चेंजिंग जो उनका प्लान है उसमें टाइम लगेगा. द प्रॉफिट्स आने में बहुत टाइम लगेगा. तो तब तक के लिए वैल्यूएशन हाई हाई मुझे लगती है.
If you compare 23rd March, so the stock price was around 840, 850. तो अभी 2100-2200 के आसपास चल रहा है. तो अगर वही अगर आपने वही कहते हैं ना कि अगर सही टाइम पे सही इन्वेस्टमेंट, तो मार्च में उस टाइम पे अगर किसी ने लिया होता 800 के अराउंड में, तो अभी भी वो कुछ स्टॉक्स को सेल करके प्रॉफिट बुक कर सकता था. बट वही बात है, आप ठीक बोला, अभी 2100-2200 के हिसाब से है, बट फ्यूचर में वो कितना आगे ग्रोथ करेगा वो डिपेंड करता है. लेकिन अगर आपने तब लिया होता मार्च में 800 के प्राइस पे, तो आपको बहुत ज्यादा प्रॉफिट अभी भी 3 टाइम के अराउंड प्रॉफिट हो सकते थे.
I'd like to come in and say something on Reliance. See, Reliance is a story. How it is going to play out, we don't know. See, it has a lot of promise in it. We don't know whether what they are promising, that the 5G technology that they have, which they will even be able to export it out to other countries, in itself is a huge potential. If I just have one company in India that says, I have 5G technology and I'm ready to implement this technology, export it out to several countries, it is a huge valuation for me. It's a concept stock is what I'm trying to say. Compare, you've heard the news that Geo platform, they're wanting to list. They're wanting to list, not in India, but they're wanting to list it in the US NASDAQ. There's a reason to that, because in India, we don't have any similar company available. And the valuation that the technology company can command is amazing. Look at Amazon. Amazon is bigger than Microsoft in terms of market cap, but in terms of sales, no. The point I'm trying to make it is that it's basically trading 200 times its profit. Microsoft is just trading 30 times. And that is why Amazon is such a big market cap company than Microsoft. Apple, Apple is trading what, 20 times, 22 times, and it's close to 2 trillion, but still it's almost at par with Amazon, slightly bigger than Amazon today. But the point I'm trying to make is that concept stocks, if you see Reliance as a concept stock, I see 2100 is no valuation for a concept stock. So tomorrow, they have promised two things. In the next 3 years, Geo platforms will be listed. And the other thing what they will do is that the less premium commanding business that they have, which is the O2C, oil to chemical business, will be listed separately, which means that the lagging part of the business will be kind of, carved out so that the concept portion of the business stay intact with Reliance. And imagine after 3 years, when whatever this company has promised, they've delivered. They have never cheated the investors. And whatever time frame they have promised, they have always delivered before that time horizon. If tomorrow Geo platforms lists on NASDAQ, then it will command a premium, a multiple of 50 times, 60 times, just to be this is a very modest multiple. It could be far higher than this multiple. But Reliance is trading at what, 30 times? So I see huge potential. And again, it's high risk, high reward. But I see huge potential in Reliance, even from these levels. Because remember the example that I gave for the retail Walmart? Reliance Retail is much, much smaller, and it has potential to grow far bigger than Walmart, that particular segment in Reliance. So I see huge potential. I don't want to put in an end number, and I know that the investors that they have pulled into themselves, they're not in here for making 20%, 30%, 50% returns on the stock. They have made this investment into the Geo platform because they are seeing 10 times returns, 20 times returns, maybe 50 times returns. That is the kind of story that I'm seeing Reliance to be. So I have no problems with the valuation.
It is actually a game changer for India as well, because we are from telecom industry, and we know that there are handful of equipment manufacturers in the whole world. And if Reliance comes out to be in that category, it's a totally game changer for India.
It is. Just remember that one good example, and I'm telling you because I learned it the hard way. I always wanted to invest into HDFC Bank, way back in 2005, 7,
You
8.
seem to be a big fan of HDFC.
Yes, yes, you have to be. You need to know the story behind it. Delivering quarter after quarter clean results, that boring kind of a stock that it is, it's generated so much wealth for me. I recommend HDFC stock to anybody. So if you have money, put it in HDFC Bank. You'll never lose money on HDFC Bank. It is the kind of the returns it's generated in the past. So the point I was trying to make is that uh, when you talk about companies like Reliance and the kind of concept stocks and the premium multiples that it can generate, it is like amazing. So with HDFC Bank, the example I was giving was I always wanted to invest into HDFC Bank way back in 2008, 10. And I thought that it's way too expensive. Why should I buy a bank which is as expensive as HDFC? Maybe I should get into a cheaper bank like an ICICI or something else. But then these banks never gave me the return that HDFC Bank. So it demanded a premium that you should be willing to pay. So a good company, when you invest into it, if you want to buy a house in Kolaba, South Mumbai, you will get it at a premium valuation only. Think of it like that, right? Rather, if you buy a house in the countryside, you can buy 10 houses for that amount of money. So which one do you want to buy? The question is up to you. If you still buy into a premium stock, the reason why it's commanding a premium is because it can generate more returns for you over the long term. Think about DMart, a company like DMart in India, it's trading at 100 times. Even after such poor results, nobody is questioning DMart for that valuation. And it still continues to, people are still continuing to pay 2,000 rupees for that stock, right? So why not Reliance?
Yeah.
It is still 30 times.
Any thoughts, Akshay and Pushyan over it?
Go ahead,
Okay.
Pushyan.
Okay. So this is one of the interesting questions because I started using the stock market or started trading in stock market. So in March or April, when actually the COVID hit India, we were expecting the market to go down, correct? How is it that, what do you think your views are on why did the Indian stock market actually is rising?
Because of
Okay,
Chinese
so
investors.
no. So
Akshay's conspiracy theory comes in.
no. This is not a conspiracy theory. It's a fact. So there is a term coined for it called Robin Hood investors. And the thing happened this time is the FIIs and DIIs, both of them were waiting because they were thinking the stock market will go down even further. So I think Nifty was 7,500. They were waiting that it will go further down because the fundamentals look very tough on India. But suddenly the Robinhood investors, people like middle-aged 30s, 40s, Indian retail investors, around more than 2 lakh demat accounts were opened within the COVID period. People sitting at home, they started investing, and people like us who earn salaries, they started investing in the stocks. And FIIs, DIIs, mutual funds, and everybody, they were shocked to see that what exactly has happened, because they were not the investors during this time. It was the retail people who brought the market up. Now, whether it's a right thing to done or wrong thing, wrong valuation, I don't know. But this is what happened. Retail investors were the people who brought the market up at this time. Fundamentally, it should be low, but this is what happened.
What is the FII and DII you talk about?
Foreign institutional investors, like institutions like Warren Buffett could invest in India also, JP Morgan Bank, all those banks like institutions institutions, they can invest in India, and DIIs can be mutual funds, so local institutions. So it's like that, and we are retail, like we open individual accounts.
Hmm.
Shikhar, Pushyan, your views?
See, I beg to differ with this approach because retail investors in India are minuscule. They don't have the capacity to move the markets. The market is always being moved by the foreign institutional investors, always by foreign institutional. But now, the domestic institutional investors have become quite busy, and they have a good money in their hands, and they invest. So they also kind of move. Right now, it is like 50-50 in India between domestic and foreign. Now, did anybody notice that in the US, because US always wants to play safe, they have a lot of money at their disposal, and what they do is they buy their solution is to buy the problems out always. You know, it's not working for them in Pakistan. We'll pay you. You fight the war for us. Things like that. Similarly, here is a problem. Okay, we will buy. We'll throw $2 trillion. We'll $2 trillion. Can you even imagine that amount of money? They basically announced a package of $2 trillion. And where did that money go? Now, if you go through the news, that $2 trillion is not invested in the US. Some of that money has gone into China, their adversary that they have, right? All of that money. That money goes across the globe because when the banks have that money at their disposal, they will try and find how best can I compound this money. And again, their diversification strategies would come in, their risk factors would come in. And when you see economies and the stock markets are down like 50%, then they invest the money all throughout the globe because that stock market is going to, at one point in time, it's going to go back. And that money came back in India. So, and it's not an Indian thing. Indian market is a laggard. If you compare how the US market has done, how the other emerging economies have done, Indian market has been a laggard. We have been giving less returns compared to the other stock markets. So it is not a unique phenomenon to the Indian market. It's happening globally.
Okay,
Okay.
cool.
Okay. So I have one last question, okay, for the day, and it's a combination of two or three questions, okay. So what is a blue chip stocks? What is a penny stock? And why should you prefer blue chip stocks over the penny stocks? Like, why should not one buy the penny stocks?
See, blue chips are companies who have proven track record, right? So they have been out there for many, many number of years, and they have generated X number of returns for you. So they have kind of generated a trust, like I've been using these names, Reliance, HDFC Bank. They've been out there for, 30 years, 20 years, I don't know for how long. And they have been generating, compounding people's wealth year after year. So that track record is there. You can trust those companies. If you don't have the time to do your own research, then you can blindly trust these companies and put your money there, right? So these are blue chips. Penny stocks are something, for one or the other reason. They could be new companies, they could be old companies who have failed, and because of certain reason, their valuation is ridiculously low. Something like a Suzlon, right? And if you have done your research right, if you knew that Ruchi Soya is going to be acquired by Patanjali, and honestly, the fortunes will change for the company very soon. If you have that kind of information, you could have invested in Ruchi Soya and made millions. If you knew that Arvind Mills is going to be acquired by Reliance and it's going to be the top, the PPE generating kit in the company, and it's going to generate so many kits that you wouldn't even imagine, then you could have invested in Arvind Mills. These were failed companies, and that's why they were at penny valuations. If you know that, today a company like Suzlon, which is a failing company, and honestly, the fortunes will turn because you've done your research and you know for sure that Suzlon will turn around then you can invest in there. Or maybe Vodafone is a very good example. It's a failing company, slowly dying. It's a penny stock as of today, and you know that, okay, somebody is going to come in and take care of their debts and the money that they have to pay to the government, and automatically that it's going to compound your wealth like anything, or JP Associates for that matter. So it requires a lot of research on your part, and even if your research is correct, there's no guarantee that one or the other factors that is not visible today, maybe tomorrow something new comes into the picture and your equation completely changes. So it is called high risk, high reward strategy. And even if you're 100% convinced, you can't really put all your money in these penny stocks. You would always expect that I've done my homework. I think that this company is going to turn around, but maybe I will only invest like 5% or maybe 3% of my investment in these penny stocks, because these are high risk, high reward strategies.
Okay. Pushyan and Akshay, any views?
Any
thoughts?
final comments?
या एक चीज मैं बोलना चाहूँगा, लाइक फॉर फॉर स्टार्टिंग इन्वेस्टर जिसको कुछ नॉलेज नहीं है, और वो अगर ये स्टॉक को फाइंडिंग एंड दीज आर डिफिकल्ट फॉर हिम, तो जैसे ऑलरेडी आंसर किया है उसमें मैं एक चीज ऐड करना चाहूँगा कि ETF एंड म्यूचुअल फंड आर गुड, बिकॉज एक्सचेंज ट्रेडेड फंड एंड म्यूचुअल फंड, इसमें आपको ब्लू चिप और ये पेनी स्टॉक को आपको फाइंड आउट ही नहीं करना पड़ेगा, आप डायरेक्टली इसमें इन्वेस्ट करो। ETF का एग्जांपल तो मैं आपको देता हूँ, जैसे लाइक फॉर एग्जांपल अभी हमारा निफ्टी चल रहा है 10,700 के अराउंड चल रहा है, ठीक है, बट यू हैव टू बी ऑप्टिमिस्टिक अबाउट स्टॉक मार्केट कि फ्यूचर में, नॉट फॉर लाइक 2 months 3 months, आपको लॉन्ग टर्म इन्वेस्टमेंट मीन्स मिनिमम 5 years और 10 years का आपको लेके चलना पड़ेगा टाइम पीरियड। तो अगर आप ये सोच रहे हो कि 5 years 10 years तक मैं स्टॉक मार्केट में मैं जो पैसा है वो मैंने इन्वेस्ट किया एंड मैं उसको पैसे को मैं भूल जाऊंगा, मीन्स कि लाइक फिर मैं उसको नहीं निकालूंगा मिनिमम 5 years या 8 years 10 years, तो ETF एंड म्यूचुअल फंड्स दीज आर गुड ऑप्शन। फिर उसमें आपको इंडिविजुअल स्टॉक में आपको लाइक शिखर ऑलरेडी सेड कि ब्लू चिप कंपनीज में आप कर सकते हो, बट अगर आपको इतना रिसर्च भी नहीं करना है तो आप ETF एंड म्यूचुअल फंड से स्टार्ट कर सकते हो। आफ्टर दैट यू गेनिंग नॉलेज कि कौन सी कंपनीज अच्छा कर रही हो और प्रॉफिट अर्न कर रही है, तो आप फिर ब्लू चिप्स और दीज स्टॉक्स में आप स्टार्ट कर सकते हो। तो अर्ली इन्वेस्टर्स के लिए नाउअडेज ETF इज अ वेरी गुड ऑप्शन, उसमें आप स्टार्ट करिए एंड आफ्टर दैट इफ यू फाइंड एनी मल्टीबैगर स्टॉक जो फ्यूचर में मल्टीपल टाइम्स रिटर्न्स आपको दे सकता है, इफ यू कुड फाइंड आउट, तो वो तो फिर बेस्ट ही हो जाएगा। So this is my
Thank you. Akshay. Akshay, any final comments?
No, I just agree with both the gentlemen.
Okay, great.
Nice
Awesome.
comment.
Yeah. So what I basically understand with all of this discussion is, if it's good to invest in stock market if you are going with blue chips for a larger amount of years, where just you are depositing in money, like maybe some amount, and then just investing it for a longer run, it's very good. But there would be a different approach if you want to have it for a shorter. So basically you need to know how much time, what amount you are expecting, correct? Within 5 years you are expecting something, or within 1 year, within 10 years how much you are expecting, and you should invest accordingly, correct? And you should not be the person that ki aaj maine kharida, I bought a stock today and then I sell it tomorrow. That would, and just a difference of 30 rupees would not make difference. If you are investing in a blue chip, it's always better to have it for a longer term. That's
Okay.
Is that the correct statement?
Yes. Yes, Abhishek. Okay.
So there are
wrap
no
up करें हम?
rights. There are no rights or wrong, Abhishek. So for someone like Rakesh Jhunjhunwala, he makes a lot of money in trading, and he would not agree with that statement. But for the general masses, who are new to stock market, rather be in here for the longer term, because the market volatility can take anybody out. The other thing is that don't invest in stock market thinking that you're building a retirement corpus. No, because we are all humans, we falter, and when the markets don't do well, we have the tendency of taking the money out. We are all humans, right? For that, you have a very good scheme from the government, which is NPS. Invest into that because 30% of the money is being sponsored by the government, right? So they are paying the money for you, and then it's locked. You really can't take the money out even if you wanted to. So for retirement, that should be a first point, first go-to avenue. And then stock market is for any excess money that you have. You wanna, instead of keeping the money idle in your savings account, just put it in the stocks. That is how I do it. So,
Mhm.
Okay. Yeah, we have a different chapter altogether for NPS, EPS.
Yeah,
And
we
yep,
do that. So, should we wrap up now?
yep. Thank you. Yes, let's wrap up. Any closing comments?
हो गया भाई,
Abs-
closing
हो
बहुत
गया
हो गया.
हो गया ठीक है.
सबने दे दिया
Thank you.
comments.
Sabdi Didia. Thank you so much. Thank you, Shikhar sir. Thank you, Pushyan. Thank you, Akshay Gilhotra, for being here to be part of the Ravan the show.
Thank
And
you very
it
much,
was
guys, and it was a great session.
yeah,
Quite a knowledgeable one.
quite a knowledgeable one.
Yeah.
Yeah, we also learned a
So,
lot. Thank you for inviting us.
no
Thank you very
problem.
much.
you guys.
So,
Bye.
yeah. So we'll be doing these kind of sessions in coming weeks as well. So let's see what kind of session we'll be having next week. So just keep in touch.